Okay, so welcome everyone. Uh, Firstly, if you're new to the Build Beyond series, last year Checkout launched a series of webinars aimed at bringing together a targeted group of senior product, e-commerce, and payment leaders from other forward-thinking businesses to discuss various topics within the payments realm. It's a chance to hear experts talk about their learnings and experiences and how they are building beyond the crisis of last year. In this episode, we're going to take a look at the fraud landscape, how that's developed, and what steps merchants can take to prevent fraud, manage chargebacks, and what benefits that will have for their business. I'm Bradley Reese, the Chief Commercial Officer of Checkout.com. Checkout, if you do not know us, you must have been doing social distancing very seriously over the last 18 months. But we are the global online leader in payments, providing our services to amazing companies such as Coinbase, Grab, Revolut, Glovo, Farfetch, Klarna, really helping any of these organizations manage anything to do with their payments in, payments out, and also some parts of fraud in the middle as well. Today, I'm very lucky to be joined by Adrian. Adrian, I'll hand over to you to introduce a little bit about yourself and what you're working on.
I'm happy to be here, Bradley. Hi, everyone. I'm Adrian Sanders. I'm the CEO and co-founder of Chargehound, a automated chargeback representment tool. Recently, we were acquired by PayPal in May of this year, and happy to chat chargebacks, fraud, risk, and all things payments today. Really looking forward to it.
Likewise. Cool. So some housekeeping before we kick off. The session is scheduled to last 45 minutes. It may be a bit faster, it may be a little bit longer. If you do have any questions, there is a Q&A box you'll see at the bottom right-hand corner. Feel free to use it. Put them in there. I'll be monitoring them as we go through. I probably won't take them until the end, but I will try and keep an eye on them just in case anything relates specifically to something that Adrian's discussing at that moment. So I guess to kick off, last year, and obviously everything COVID related, the changes that were already happening in the online world, but consumer behavior definitely evolved at a faster pace than what we'd ever seen before. Adrian, what impact did this have on fraud and chargeback rates? You guys have obviously a wonderful position here of being able to view that data across so many different merchants. So what trends did you see, and do you think they're going to continue?
Yeah, I think for sure the trend will continue, but I think just to kind of speak to it, the sea change of COVID and what it did to online buying behavior. The thing I always use just near field to me was seeing my own family and my extended family and the change in behavior that it forced on them to purchase online. So my mom, I think, is a good example of someone who purchased things online in the past, but then during the pandemic and still, right, is really heavily favoring purchasing online. And so what that did is I think, accelerated all online transactions, and sort of naturally with that comes an acceleration of chargebacks and fraud. And so I think, it's hard to parse the sheer volume of data. I'm sure you guys at Checkout saw this too. But on our end, right, we saw, massive spikes in chargebacks, in the beginning of the pandemic with, companies like event companies, concerts, ticketing, hoteling, et cetera. But even after that wave kind of subsided, you're just seeing a general an uptick where you just have more consumers buying things online, and sometimes they're new consumers to the online buying process. And so there's more opportunities for friendly fraud or forgetful fraud, right? Where they're like, oh, I didn't know I bought that, or it got delivered to the back door or whatever, and I didn't see it, and I called my credit card company. So just generally the rising tide, I just think, increased the disputes pretty astronomically.
Would you say that was linearly scalable then? Because I mean, you touch upon that some of these are first-time buyers, and of course, the online process may be confusing to them. So did you also see an uptick in these new customers specifically buying online for the first time? I mean, I wonder how much they even know about the chargeback process and their ability to do it, or whether you just had confused my grandmother or whoever going online and then being confused by the transaction calling their bank.
That's a good question. And I think that the way we think about it, so there's a couple of things I think that impact that. So first off, no, it's not linear, right? But it's not just consumers, right? Because you have to remember that, the tide rose, right? It was a rising tide, and merchants are kind of these boats, but not every boat can handle, right, this rising tide. And I think that some merchants were more prepared for the influx of purchasing more from a fulfillment perspective. But then you also have the fulfillment arm, like the shipping, right? FedEx, UPS, DHL, et cetera, where just the sheer volume of that is going to impact the fulfillment. And if you're a merchant and you're not really set up for really strong communication with your customers, so you can't scale things like customer service, fulfillment tracking, et cetera, those delays, those things getting lost in shipping, et cetera, if you can't communicate that, it's going to end up with disgruntled consumers, and disgruntled consumers, a lot of times go to chargebacks as a way of voicing that complaint. And so I think, one of the things we saw is that merchants that were a bit more ready for that scale were able to, better defend themselves from disputes with better representment, and merchants that weren't, really suffered. So.
Yeah, I mean, I think that trying times, but supply chain strain definitely would have impacted things like normal deliveries. We've seen that certainly with some of our retailers, especially those involved in electronics, especially if there's microchip components, there's things they just never dealt with before. So I guess they have to consider the macro before they even get down to the transaction level on these things.
And even as merchants, people become more empathetic the more they understand what's going on in the market. But you still have people who just needed to get that new juicer yesterday or whatever, and now they're not going to get it, and they're going to be angry about it. And so again, consumers are not a monolith, merchants are not a monolith, right? And so what you just see is, like, whenever there's a big sea change, is whatever behaviors that you were seeing before are just exacerbated, right? The good ones and the bad ones. So.
Yeah, I mean, as a juicing fan, I definitely would do a chargeback if I arrived a day late.
That's right.
So again, talking about rising tides, but equally just the natural increase that was happening anyway in disputes, of course, has been exacerbated by the move online. But we did some research about a year or so ago with Oxford Economics, and we found that 67%, so pretty nicely 2/3 of merchants, they don't receive any fraud or chargeback analysis. Which is obviously a bit of a surprise considering how much this can cost a business. I mean, knowing how you guys specialize and obviously how you're assisting merchants in managing the overall disputes process, can you help shine a light on just how important this data is in creating a strategy for combating fraud, preventing chargebacks, but also crucially, what is the bottom line for the merchant? How does this actually benefit their business?
Yeah, I mean, I think it's a really great point, and it's not surprising to me that 67% of merchants don't receive any fraud or chargeback analysis, particularly on the chargeback side. As you know, chargebacks are historically kind of the least well-maintained or respected part of the payment stack, in my opinion, right? It's kind of the dirty laundry, or we call it like the janitorial of payments, right? Because no one really wants to do it. No one wants to manage it. The acquiring banks don't care. The issuing banks kind of don't care either. And the payment processors can really only work with what they get from the chain, right? And even then, it's not quite sure what to do with the data other than just the representment, enable a process for representment. And so because that process has historically been very manual, you don't get really good data out of that manual process, and there's not a lot of learning. So for Chargehound, what's been interesting is, since we are kind of the only technology approach to that problem, we create all this opportunity because we have an API, because we're structuring all that data for insight. And so the things that we learn really quickly are things like, yes, if you have more structured data around your chargeback problem, you can actually understand how much of this is friendly fraud, how much of this is criminal fraud, right? Because if you're winning back, 90% of your disputes, well, then you have a friendly fraud problem, right? But if you're winning back, 5% of your disputes, you have a criminal fraud problem. And so again, this is, it's not the end all be all. It doesn't tell you everything about your relationship with the consumer world and the fraud world, but it's a really strong bellwether, right? And so what I would say is that just having some structured data, or just submitting enough disputes, right? For a lot of merchants pre-COVID, because everything is historically manual, they're just like, it's not worth it to submit disputes. If your average order value is $15, right? Maybe you just take a punt on every dispute. Now you're using Chargehound, right? You're automating that. Well, now you can do that for pennies on the dollar, and you're able to get that data so you can make some better assessments about what your situation is like. So really, it is a paradigm shift, not just because of COVID, because COVID has obviously, and this new consumer behavior has shown a light on this, but also upgrading this part of your stack to be tech oriented and to be structured data on an API opens up these possibilities. So it's not surprising to me all that the vast majority of merchants like kind of have no idea what's going on. It's not their fault. The tools hadn't been built until now.
So the first time I heard you talk about structured data, I nodded my head like I understood fully. And then you actually explained it, and I then really understood what that means and how that's helping you leverage that information across a portfolio approach as well. So maybe it's kind of a bonus question on that point. Can you give the audience a little bit of a rundown of what structured data is in your world and how that helps in this process?
Yeah, so let's talk a little bit about chargeback representment, right? So in the olden times, before Chargehound, right, you would get a dispute from Checkout or Stripe or whoever, and you as a merchant, it would say, hey, you need to defend this dispute. You need to prove that this is not a fraudulent charge, and let the issuing banks know that you the merchant should keep the money. The card should not be reversed. The charge should not be reversed. And so you need to collate and put together a bunch of evidence. So let's say you sell Nikes online. And so, you say, well, I have the shipping address of this person. I have, the shoe size and the SKU and, all this other data. And so, historically, you would manually cobble that all together and put that into like a PDF or something. And then you would upload that to, Checkout, who would then pass it on to the issuing bank. So, maybe you win the dispute, maybe you don't. Chances are most likely you're not going to win that dispute. But all of that data, the SKU, the shipping address, area code, everything, right, is unstructured, right? It's just in that PDF. You can't do any analysis on it. It doesn't really exist from a data analysis perspective. Now, when you use Chargehound, right, you don't have a person assembling all that data most of the time, right? And so instead, you're using our API, you're passing that data to our API, and we're doing all that assembly for you. But we're also, keeping track of all that data for you. And so that is the structured data, right? It's just sitting in our databases ready for your analysis on the API. So you could do things like, show me all of the friendly fraud that has been won on this SKU, right? So it's like, wow, Nikes are a big friendly fraud, driver on my platform, or Tide Pods, or whatever. And so it's like, you have this insight that you didn't have before. And so that's what we talk about when we talk about structured data. You can feed all of those results on that level back to your fraud scoring engine on the front end, right? So the sky's the limit in terms of what you could do with all this structured data. But that's what we mean is like in the before world, you can't even think about what to do with it because it doesn't exist, right? You don't have those opportunities. And now that you do, there are many different ways to sort of put it into play.
Yeah, I mean, it's I would say it was 5 years ago, but I think this still happens today in some cases where even on the acquirer level, so the role that we play, we're receiving the notification of chargebacks directly from the schemes, but there are organizations who are still processing those via fax. So inevitably, your time to respond to a dispute is often whittled down to a few hours, even if you had the data in a digital format to submit, which they don't. Yeah. So I think there's almost a systemic problem around having the data to begin with, and then obviously what you do with it thereafter, which is of course where you guys come in. But I think it's fair to say, and you can give me a yes or no, that if someone hasn't ever dealt with disputes or has basically pushed them into the carpet because they haven't wanted to, so maybe a digital merchant's good where they have good profit margins, effectively leveraging Chargehound, they can avoid the necessity of hiring a whole team of people to manually review these disputes coming in and effectively rely on almost a templated model that you guys have built out based on your experience working with similar businesses.
Yeah, absolutely. And I would say, again, the sea change of COVID and the new world we're in, maybe you had 2 or 3 in-house people or whatever in the past, and it's just not tenable anymore with the scale of disputes and the scale of transactions. And I think that that's something that we've always told merchants like, hey, you could be more efficient here if you're not using people. You could put those people on fraud prevention, right, and review, which is where personally I think there's an enormous amount of value in having people. And but sometimes it's hard to convince a merchant, right, to change the game and change things up. Or maybe not for you guys at checkout, but for us at Chargehound, sometimes it's tough. But with the new world that we're in, that drive and that desire to not put bodies on this problem is really clear, right? And so the idea that you were doing 100 chargebacks a month in the old world and now you're doing 1,000 chargebacks a month, that's the sort of paradigm shift that I keep talking about, that really gets people to see the value, and they're like, wow, we can't just keep hiring people for this, right? Or make our Excel templates a little bit more efficient or whatever. Like there's an escape velocity and you're never going back to that old world.
Yeah, completely agree. I think like you, we rely on data. We love A/B tests, partly because it allows people to compare apples to apples. And in this industry, the cost of changing or changing core business processes is very high. So obviously we try to look for data to actually prove the points that we're trying to make. And I think the same can be reflected in how you guys are going to market as well.
Totally.
I mean, there are advancements in technology the whole time, and obviously access to data is changing the way businesses have approached fraud. There was, you and I, when we were talking about this yesterday, there was a really nice example you used there as well. So maybe you can call back to that one. I think it was the one related to Discord.
Yeah,
they were able to improve their processes and what that meant to their business. Yeah,
we have a fantastic partnership with Discord, and we recently put together a case study, which is available on our website. Put together by Meredith Sweeney, our marketing person, who has done a great job sort of helping these merchants sort of really dig into their data and understand the impact. In the case of Discord, the digging wasn't that difficult because we've returned 45x ROI on what they were doing before. So, that's a number that's so absurdly high. And we talked about this yesterday, that sometimes when you're bringing technology into a non-technology space, you can get returns like that. And they seem unbelievable, but it's because, in the previous world, right, you may just not be fighting disputes. It's just not worth it to fight a $5 chargeback or whatever. And so one of the things that I think is really important for merchants to understand, but also everybody in the payments ecosystem, is these examples, why I keep bringing them up and driving them home. Obviously, the outsized return is powerful and it's important, but it is this idea that Discord saw massive growth during the pandemic. They're an online gaming community app, right? And so online gaming has really exploded. And so, on our side, what we were able to do is step in with them and say, look, you guys are already a really technology facing company. You have engineers, you have an ethos around solving problems with technology. That's our ethos as well. Let's align. And when we're able to sort of do that, we're able to quickly implement the solution for them. And so they already had a lot of data ready to, be quickly passed to us so that we could structure it and get going. And so this is, I think, something that everyone has to really see now, is that there's just, if you are ready, if your systems are set up and designed to be ready for a big influx, and be flexible. So yes, we can quickly pass data to a new service. We can quickly integrate with an API, or that service is doing things like OAuth to make onboarding much easier for us. That's how we get to these returns, not just outsized returns, but get to them quickly, to validate hypotheses, right, and to learn. So I think that again, it's more everything that, as technologists, I think you and I would say, we are always preaching like, hey, technology is going to make systems more efficient, or it should. But again, in the world we're living in now, it's sort of a necessity if you are going to keep up with companies like Discord.
100%. I mean, humans are great at many things, but linearly scalable problems tend to be best dealt with by computers and machines. So obviously, as this continues to grow, I guess at some point, every organization would outpace the ability to hire enough people to do this anyway. So let's flip it up a little bit. As opposed to dealing with disputes, let's talk about what happens before that point and how we get there to begin with. So we've talked about consumer behavior a little bit, and obviously the increase in friendly fraud was definitely highlighted for various reasons. Obviously, the chargebacks that then come thereafter. But how do merchants get the balance right in your mind between customer experience and fraud prevention? There is that sort of accepted wisdom in payments that there is a trade-off to be made there. So I guess how should merchants approach that?
This is a great question, and I feel like if you ask 1,000 people in payments, you will get 1,000 different answers to this, depending on what their background is. I'm an entrepreneur, right? Like I'm a business person first. And so I'm thinking about revenue a lot of the time as like the CEO. And so for me, I want to be aggressive on growth, and I want to be aggressive on how we get there and what that means for the company. Obviously, if you're Walmart, right, or you're some massive org where it's really important to just be highly optimized and maybe not necessarily efficient in your revenue inflow just because of the sheer scale of things, you can be more cautious. But what I would say is that those are the sorts of parameters you have to put on this decision making process. And so what I mean by that is that fraud prevention is friction in the process, right? As much as we in the space would like to say that it's not. Anytime you have any sort of check, even if it's a half of a nanosecond, right? That's still time. And there's a chance that that transaction may not go through. And so that's the trade-off, right? And so what I would say is that, fraud and risk, there are, I think that there are ideologies and there are frameworks that different people apply. And if you're a merchant, I think you really have to think about where your company is trying to go and what you're willing to give up on either side of that balancing act. And I think that post-pandemic, what we've seen, like I said, is merchants that are geared up to scale their communication with their buyers, with their consumers, just have a better chance of retaining buyers, of having a better service, of I think you're just looking for really strong alignment with consumers that, hey, like we'll get through this together, and like we're gonna get there. We'll get you your juicer or whatever it is. And I think that the flip side of that on the fraud prevention side is that, yeah, you can't, the old world modeling of fraud prevention, just with the sheer volumes that are at play, you need to have a system that's learning very quickly. And you need to have people in your company that sort of understand the modeling that was used, that needs to be used now, and what sort of experiments you want to be running. I think that on our side, right, on the Chargehound side of things, where we are becoming increasingly interesting and pivotal is that we can get some of these results around friendly fraud and criminal fraud confirmation back into your system. And so again, like, you maybe didn't know whether or not that was criminal fraud or not. You let it through. Well, we won the friendly fraud dispute. So that means that the transaction was valid. And so that can be fixed, fed into your model. But I think merchants just, I know I always get frustrated when people say this, like it depends. But what I really mean there is that the framework for which you and your company, what you're trying to do, if it's growth at all costs and you got VC money and you just need to keep growing and going, you need to be aggressive, right? You're going to get left behind. And so you have to be aggressive. You have to have as little friction as humanly possible. And you're going to take a bath sometimes, right? But you're going to expand your footprint so significantly that, maybe you end up being the winner in your space, or you get some escape velocity, et cetera. If you're a bootstrap company and, you live or die by your monthly revenue, it's going to be very different. And you're going to be looking for highly efficient relationships with your buyers where they are repeat buyers, high margin buyers. And you're going to have more friction in your fraud prevention space, but you should be able to get through that with really strong interactions with actual buyers, right? So that's stuff like, hey, we declined your card, and like, can we get on the phone, or can we get into chat real quick and get this sorted out, right? Any sort of automated solutions that do things like that, right? 3DS2, all that good stuff, right? Those are things that I think, for better or worse, they can be good, right? They can be good, useful things for merchants and not just a pain for them. If the lens is sort of fixed and you have a good sense of what you're trying to accomplish.
Yeah, 3DS2. I'll put a pin in that for a second because I do want to come back around to all things strong customer authentication and the inevitable friction that brings in. But I like that you touch on the feedback loop. That is really important to validate assumptions. And that's one thing that I think often didn't exist is that people write rules that intuitively they think are working for their business on their fraud screening front end, but without being able to actually see the impact and effect of those, as in what was let through and what was blocked, you're never able to train that system. But I think the takeaway I got from that is that it's not one size fits all. It probably never was, to be honest, but the ability to actually view your customer, the product line, obviously your own business goals as well are really key there too. So really trying to make sure that you're actually personalizing almost the fraud experience down to the customer and the product level versus what probably would have been an older school approach of just having blanket rules because we're a retailer. So this is how we view it. Whereas, of course, every customer is not created equal either. So they need to be viewed under a different lens.
Yeah, and I think again, like it's just hard to wrap our heads around the scale of what's been going on and just the sheer volume of transactions. Like even for us, and I'm sure for you guys, it's just mind-boggling, right? And I think that if you're a merchant, you are trying to keep up, but also fraudsters now have a much bigger environment to play in. So you are now a target. You were doing 5 million in revenue last year. Now you're doing 25 million. Like, congratulations, you're now on the ATO like list somewhere in Russia or China or Tanzania or whatever. And it's like those are that's how that stuff works, right? And so I think that again, there's that to be worried about. But at the same time, in some ways, I think more importantly, your competition, right? You've now entered into this fray where you're doing 25 million in TPV, but how do you get to 30 or 40 million in TPV when literally there are 1,000 other merchants trying to do the same thing in your space across the globe? And so you're going to be having to move faster. And again, maybe in the old world, it was fine for you to plod along, but now it's like, if you're not moving faster, if you don't get, like you're saying, those feedback loops and hypotheses tested and learning, someone else is, right? And then their marginal gap is going to be 2 bips above you. Now it's 3 bips. Now pretty soon it's 5 bips, right? Now, and so again, those are the things that merchants are going to either figure out or they're going to struggle for sure.
Yeah, I mean, fraud and conversion have always been two sides of the same coin, but equally there is a huge cost component there around how efficiently your business is running. And I like that again, that everyone's online nowadays. They were forced online last year. If they didn't go online, then their business may not have done so well. But that just means it's increasingly congested ecosystems. If I want to buy a hammer online, I could probably get that from 10,000 different e-commerce stores in the US. So,
Yes.
once I finally find my way there, these companies invest vast amounts in SEO, their marketing, the catalog management system on their website, what have you. Obviously, making sure that you're able to capture those orders when the customers engage is really, really key to that too. But yeah, it's fine margins, I think, in payments nowadays. If you're able to decrease fraud by 5 basis points or increase conversion by 50 basis points, we're talking basis points here, not full percentage points, but that compounds and that adds up over time. A customer who isn't able to buy from you the first time or their order is blocked because your fraud system isn't set up correctly, there's a very good chance that statistically they will not ever come back, whereas they could end up being a long-term repeat customer for you. So getting these things as close to perfect as possible out the door is key, but knowing that's never going to be the case day one, understanding that it's a learning process, I think that's something else that is often forgotten. There's a sort of set and forget approach that is
Exactly. Risk. I think people in payments, I mean, there's kind of 2 schools of people in payments, right? TPV transaction people, and then risk and fraud people, right? And I think increasingly those worlds are intertwining, but also in some ways, risk and fraud has been sort of like this, kind of afterthought, frankly, in payments for a long time. And it's just, we're starting to see that risk and fraud actually is in some ways just as critical as transaction, because transaction is becoming so table stakes, right? In some ways, in the US, for example, it's not just that you have to sign up with Chase or whatever, right? That world is gone, right? There's a wide variety of options for transaction. But in the risk and fraud space, what we're seeing emerge, right, is companies, even PayPal, right? Like part of our acquisitional discussions is what's exciting is that PayPal understands that there's real value in risk and fraud. And so I think that and obviously other payment processors have seen this as well. And I think what's interesting about that is that, well, if TPV becomes kind of table stakes, then where are you as a Rails provider, right? Where are you adding value? Well, there's just a whole other suite of things where there's actual value to be provided if you have a scale, right? If you have scale and you have a network effects. And risk and fraud is the one that's like just tightly entwined into transactions. So it makes total sense to try and drive value there. And so that's where I think, like you were saying, it's like, if you can drive 5 bips on risk and fraud, it's like 5 bips is a huge swing on transaction, right? Like if you were talking about 5 bips between payment processors negotiating a deal for a merchant, like that's a lot, right? And so this is, I think, where a big and an interesting competition is going to formulate. And I think a lot of not just merchants, but people in the payment space need to understand, like, actually all the auxiliary services tied to transaction are going to be where a lot of interesting innovation happens, for sure.
Yeah, absolutely. I mean, it's not a static industry. I think it used to be a case that RFPs that, you know, we would do 10 years ago, they were a tick box exercise. Do you have Alipay? Tick. Do you have Visa?
Exactly.
Now it's not so much do you have it, it's how you built it and what else are you able to squeeze from it. And
can it handle 100x customers in a month, right?
Right.
Can it handle EMEA over the course of 6 weeks? Can we do APAC? No one can do APAC, but no, I'm just kidding. But you know, I think those are the sorts of things that I think that are like, you just wouldn't have that conversation even 5 or 10 years ago with a merchant. They wouldn't be like, oh yeah, what is your EMEA strategy as a US payments provider? It would be like, well, what do you mean? We can try and do it, you know? Or here's some friends of mine in Europe. And now it's like, no, you have to have not just a strategy, but it has to be sophisticated and it has to be nuanced, right? And again, that did not exist, you know, even 5 years ago in some ways.
So talking about EMEA and also talking about the fact that you can say you have something, but there's different ways of building it. 3D Secure, so I had to come back to it because, of course, as a scheme level fraud prevention mechanism, strong customer authentication, verified by Visa, MasterCard secure code, 3DS as it's commonly known, and now, of course, the latest iteration, 3DS2. Mm-hmm. I mean, I'm going to just ask you broadly, what's your take on this? As in, where do you see 3DS2 coming in? How do you see this enhancing the global payments infrastructure and ecosystems, or do you not?
I think 3DS2, you know, it's like the PlayStation 2, right? We'll have 3DS3 soon, I think. But I think that, look, I think it's a good idea to have authentication, you know, at the card network level, that, you know, that the card schemes sort of provide guidance on, that, you know, can hopefully be implemented in a way that's really good for merchants. I think, like any technology or any time you add friction, as I said, there is going to be problems with that, or challenges rather. But what I think is interesting about 3DS2 and sort of like EMEA in general, right, is that how you implement these things have not just technical challenges, they have cultural challenges, right? And I think, you know, unlike the US market, which is largely homogenous, you know, or hopefully continues to be largely homogenous, I think that, you know, in EMEA, it's like how you buy in Poland is very different than how you buy in Spain. A buyer in Poland is not the same as a buyer in Spain. And it's not just about their level of technical sophistication. It's, you know, what are they, what is their risk profile, and how interested are they in knowing that this transaction is secure versus getting their juicer, right? I think that it's up to Europe to sort of figure out how to standardize some of this, but some of that, I think, again, is defined by consumers expecting to be able to buy something from Poland when you live in Spain. And so I think 3DS2 is a good idea. I think anytime you look at like that sort of level of implementation, the devil is in the details, and it's in adoption, right? And I think one of the challenges for 3DS, right, has been around adoption and who gets to play the game. And, well, I'm just an American company coming in and I'll get to it or whatever. If consumers don't care, right, you're going to continue to have friction between the networks, the merchants, and the issuers. That friction is healthy in some ways, right? But in other ways, right, you have to look at things like Afterpay and Pay in 4, Klarna, and all these other models where, hey, maybe there's too much friction here, and maybe there's a better way for me as a consumer to get this and not have to fight this. So I don't know what it's going to look like, but I do think that it will have to react to the demands of consumers, and the complexity of the consumer, especially in a place that's so multicultural, for sure.
I mean, you talk about friction between, it's almost customer, merchant, scheme, issuer, everyone pointing the finger at who should be doing what and taking responsibility.
Exactly. Yeah.
I mean, the liability shift that 3D Secure can offer to a merchant, where the issuer takes on the onus of responsibility for that transaction. Of course, as we saw in the US, again, there is probably no market where the acquirers and the issuers are as well informed around card processing as in the home markets of Visa and MasterCard. And we saw, of course, with 3DS version 1, none of the issuers would accept that transaction. A lot of the time they were choosing to decline it because their internal risk system would tell them, hey, if you take on this responsibility, it very likely is going to cost you some money here.
Yeah. And again, I think that this comes down to, like, no one wants to be holding the bag, right? But like I said, it has to continue to be more efficient, because there are other ways of buying now that are coming, right? And there's a whole new generation of people that don't want to deal with credit cards because of some of the friction that they introduced currently, right? Or the dangers of credit, or whatever that they perceive. And so I think the industry is going to have to react to that. And I'm not blaming 3DS2 for all of that, right? But I think it's more indicative of, it's more of a symptom. And again, it's not to say that 3DS2 is bad, because I think that the goal of it makes total sense. And by the way, for chargebacks, it's fantastic, because what that means is less criminal fraud in theory coming through, and more friendly fraud. And now we have a demonstrable way of sort of defending that and proving that, and it should be aligned with the acquiring banks, the card networks, and the issuing banks. So in theory, it's a great idea. In practice, just like any card level or network level sort of guidance, it remains to be seen. So
yeah, we're watching it very closely. It's been some interesting early pilots, but again, in Europe, it's a very different sort of ecosystem to the US. So I think that's going to be the litmus test, is when we come and we see 3DS2 or merchants try to use it in this market here. I'm cautiously unoptimistic. I'm not sure if that's the right way to say it, but
if expect the worst and hope for the best, right?
Yeah, exactly. I think I'm personally a fan of 3DS2, but I think it's just one of the many tools that you need. And I think that's what payments is nowadays anyway. It's a toolbox. It's not probably a one size fits all for any.
There is no silver bullet.
No.
And we have to stop, as an industry, we have to stop pitching things as silver bullets. Like, we lose so much merchant trust when we pitch everything as a panacea. And that historically is kind of how marketing worked, I think, in payments. Is like, we can do it all for you. We do everything. And it's like, no, you don't. And just tell me what you can do. Tell me, where your strengths are, and let's build partnerships. I really believe that merchants and processors in particular, but just generally vendors, right? They have to look at it as a partnership. Those to me have always been the most successful relationships that I've seen in the industry.
Completely agree. So the last question I have, what silver bullets can I'm joking. So, I mean, this is probably the very blue sky question, as I call it, because no one can predict the future, but if anyone could, you're probably in the right seat to do that. So when you look at the fraud landscape and how you think it may develop over the next few years, firstly, what trends could we expect to see continue? Is there anything new that you would expect to arise? And I guess fundamentally for any of the listeners here, what steps can merchants take now to help set them up for success?
Yeah, so I definitely, it's a great question. And I do think about this a lot. I definitely believe that the payments platform world, the world where there are more merchants that are effectively platforms or marketplaces, I think we're going to continue to see more of that. It's just easier now to boot things up like that than it ever has been. And so with that, I believe there'll be more ATO, right? There are more wallets with random amounts of money in them online than there ever has been before. And so that is, I think, going to be a place where there's a lot of learning, massive opportunity. And I think people that play it right are going to do really well. But there are definitely going to be organizations and startups and, even established companies that get burned on doing stuff like that. But like, we're already seeing a rapid acceleration in commerce online. And so again, that's going to exacerbate any bad behavior. So generally, I think fraud will go up just like linearly. But on top of that, I think things like ATO are certainly going to continue. I think we're going to see a whole brave new world types of fraud in things like the pay in four space, or the buy now, pay later. We're going to see, again, fraudsters are extremely clever. Their one job is to leverage any sort of like weird issue or blip in the matrix, right? And try and pull everything out of it. So I think generally we're just going to continue to be surprised by the amount, not just the amount of fraud, but the different ways that things get defrauded. So what steps should merchants make? I think that, again, the sea change, and the thing that I advocate a lot for merchants that I have good relationships with, that I talk to, and this is our ethos at Chargehound, is you cannot predict the future. You cannot just say that you know exactly what's going to happen. Anyone that offers you a silver bullet or a panacea is blowing smoke. And I think that instead you can think about best practices, orienting your tech stack, orienting your team to understand, hey, we can't always just be reactive to a chargeback problem or an ATO problem. We need to have a system in place that allows us to, anticipate problems and think about what sort of problems would exist. And then when needed, we can build out from our system. So I think this is what's really exciting for, companies like Checkout, right? Is that's a central part of the Checkout pitch, is that, hey, we can help you sort of not future proof, but be set up to solve new problems, emergent problems. And I think that there's real power in that with companies, like Chargehound too, that we don't know what's coming, right, necessarily, but we're in a better place to help you than 100 random people filling out PDFs all day for that you've offshored. And so I think that what merchants need to really realize is we're not going back to the old world. The speed of things is here to stay. You have to let go of these ideas that what you had before is how you're going to get to the next step, and that everything you do has to kind of scale. It has to have some thoughtfulness around how can you structure things so that they scale. I think that merchants that do that are going to ride a tremendous sea change wave and become kind of like the defining merchants for the next 20 years or whatever. And the merchants that don't are probably going to not make it or get acquired or get absorbed. But it's certainly an exciting time in e-commerce, I think, and in general in transactions online, and certainly in payments. Probably the most exciting time since the start of the internet.
Yeah, I mean, it's disputes, fraud, they're not going away. They're only going to get worse. So I guess, putting something in place now and biting that bullet, not the silver bullet, obviously. But yes, I mean, it is something that merchants who maybe haven't been disputing anything so far or managing these, they definitely need to. And I guess to continue the analogy that has been persistent throughout this session, the juice is worth the squeeze. And
that's right.
Through companies like Chargehound, obviously they've got a great partner in which they can help, or at least get off and start fighting some of this fraud that's coming in. So amazingly, we are dead on time, which very rarely happens. So Adrian, how can people find out more about you, about the company?
You can check us out at chargehound.com. And you can always reach out to sales@chargehound.com if you want to sort of have a more deep dive conversation. Our team, like I said, we really see it as a partnership. We're here to solve problems. We always think that we can help, that our solution can help. But every merchant is different, and we really try and be empathetic to the specific goals of the merchant. So don't be shy about reaching out. We're not going to hardline pitch you on the juicer or whatever. So we're just trying to help, and we win when you win. There's a lot of mutual value with how we think about things. So yeah, don't be afraid to reach out. Check out the Discord case study. It's on our website under case studies. It's an amazing story. So definitely check it out.
Well, from my side, always a pleasure speaking with you. If you'd like to know more about Checkout, the clue is in the name, checkout.com. You can find everything on our website too. Adrian, thanks again for joining us today, and thank you to everyone in the audience.
Thank you for having me. It's been fantastic.
Cheers, everyone. Bye.